This is a YouTube channel that is going to bring you programs that is focusing on finance and business. I want to welcome all of you that are watching us today and urge you to subscribe to this channel. Ecovest TV is a program that is sponsored by Ecovest Consultants Limited, a company that is dealing with a range of services which you can be able to check under www.ecovestconsultants.co.ke. We are going to look at analysis of companies that are listed within the Nairobi Securities Exchange, and we are going to focus on those companies that are not doing very well. This is for the purpose of ensuring that investors get the right information in order to ensure that they can be able to make a very good decision in terms of their investments. So when we are doing this, we are taking into considerations all the factors an investor can be able to consider before making a choice of any particular investment to make. Now, when we look at the Nairobi Securities Exchange, there's changes in terms of performance with various companies. So in average, according to the news articles that are highlighted by the Business Daily, concerning the performance of the companies into the Nairobi Securities Exchange in the year 2019, we realized that the worst performing company is Kenya Airways. And that is why now today we are going to focus on Kenya Airways in order to advise the investors on the best way to look at this stock and whether to invest in it or not. First, let us look at the background of KQ. Kenya Airways traces its origin from the East African Airlines that was formed or incorporated in the year 1946. It operated up to around 31st of 1977 January. The East African Airways was put under liquidation. There were a lot of management issues that made it to collapse. And therefore, in the 4th of February, the year 1977, Kenya Airways was incorporated. It began operating as a fully state-owned carrier, which made it to, float in a lot of liquidity, float in a lot of profitability. But when it comes to the year 1996, it was listed under the Nairobi Securities Exchange. A company being listed shows that its performance, its stability, its management, all the factors have been considered. It's right on point. That means it's a company to reckon with. It's a company that is good. It's a company that is a stock that you can be able to invest in. Thereafter, in the year 2004, it was cross-listed now to the Dar es Salaam Stock Exchange. When a company is cross-listed, it shows that the stability has increased. So to me, KQ has been performing very well. In fact, that is why we are even focusing on this company, because why is it performing very badly, yet it has been doing very well over time? When you look at, in the year 2006, KQ was recognized as the airline of the year. So that means this company was doing exemplary. It was doing very well. In the year 2007, it was recognized, I think it was welcome to join officially the SkyTeam Associate. And so all these were progresses that are being made by the KQ. And so the question would be, what was the problem, or where did the rain start beating KQ? Of which we are going to look at it ahead. Now, I want us to look at financial performance in the past 5 years, starting from 2015. Now, in 2015, we are going to focus on, first of all, sales, or the revenue, let me call it that. What has been the revenue of KQ from 2015 to 2019? First, in 2015, the overall revenue was 110 billion. In 2016, it again slightly rose, but still maintaining 110 billion, but with 807. But then when it comes to 2017, it went down again into 105 billion. And then in 2018, it went to 114 billion. And then in 2019, that is last year, it again went up by 11% to 127 billion. So when we look at KQ in terms of revenue, the revenue has been somehow on a slight upward trend. And this is contributed by factors like, expansion of the airline. The other time, they expanded their routing system up to the United States. And then there has been a lot of expansion in terms of even its asset base, a number of things. And then they have also improved in terms of its management, in terms of operations within the airport, whatever. And even destination coverage has increased. So that could be the reason for the increase of the revenue. Then again, let us look at now, when we take at the operational costs, we subtract, and then we look at the gross income before going into other costs like the administrative and all that, we still realize that the airline is floating in some kind of profitability. In 2015, it was floating at 1.5 billion. 2016, it was 12 billion. 2017, it was 17 billion. 2018, it was 25 billion. And then 2019, it was at 21 billion, which shows, an increment of around from 40%, then 47%, and then it ends up with 22%. But then when we now remove other costs, we're now going to see, when we look at, some of these administrative costs, some of these other costs that are coming with the, with operations, we realize that now the airline started going down in terms of losses. In 2015, it made a very serious loss, a whooping 25 billion. Then come 2016, it was 26 billion. Then come 2017, it was 10 billion. Come 2018, it was 7.5 billion. And then 2019, it was 12.98 billion. When you look at this performance, there is now a certain trend. That means there is some costs that are increasing. Probably the operations costs that are making the airline to become more expensive to run. There are also costs like fuel that have been attributed to this kind of a big loss. The assets of this company has also been somehow on the upward trend. The company has been having an increment assets. In the year 2015, the total assets was worth 182 billion. In 2016, it was 155 billion. In 2017, it was 146 billion. In 2018, it was 136 billion. And then in 2019, it was 196 billion. That's the highest. There is some trend of a small increase in the assets. I was concerned. When I was going through these financial statements, I was concerned that why the changes in the assets is so big or so significant like that. And then something told me that I go to the liabilities. So when you check at the liabilities, there is also a trend in the liabilities. Liabilities in 2015 was 188. Come 2016, it was 191. So there is a slight increase. Then come 2018, it decreased to 148. And then come to 2019, it went up to 229 billion. Now there's something that I want you to notice. That when the assets increased in 2019 by up to 195 billion, the liabilities also increased to 223 billion. So that means the carrier borrowed more in order to finance its assets. It is very clear that the company is financing its capital expenditure using the what? Using the debt. And so the company should be able to consider whether the debts that they are taking are worth. They are supposed to consider whether the company is able to refinance those debts. Initially, the government has been coming up to bail out the company and also to give them funds. But then we look at the sustainability of this. Now that the government is now the majority shareholder, it is good they are giving that kind of a bailout. But then how frequent is going to be this? And then how sustainable is that kind of refinancing? But then what we have to understand is that the carrier is not doing very well. Now, how am I going to make this kind of deduction that the carrier is not doing well? The first ratio is called current ratio. This is whether a firm has got the resources that it can be able to use in taking care of the short-term obligations. So when a company is having some debts, the ratio is confirming to whether these debts can be repaid like immediately or within the short term. Actually, we can be able to get this by checking onto the current assets and the current liabilities. So if the current assets and the current liabilities are able to match in such a manner that the ratio is 1-to-1, then we can be able to deduce that the company is safe. Although sometimes it can go lower to show that the company is using its assets very sufficiently in order to be financed for its operations. A company can be able to go and borrow money after borrowing money so that they can be able to use it in terms of doing what? In terms of financing its operations. And then when you compare the two, it means it is using the value of its assets in order to finance its liabilities. Current ratio is very important, but we should be able to make focus on this. I should give this, that the current ratio should not be actually less than 0.8%. If the current ratio is less than 0.8%, or 0.8 that is, then it means that the company is trading at a very dangerous ground. Number two, we are going to look at what we call quick ratio. We are going to check now the cash and also the marketable securities vis-a-vis the current liabilities. How is it possible for the company to finance its current or short-term obligations using the cash and also the near cash assets that it owns? So we look at the cash and then we look at the marketable securities that can be converted easily into cash, and then we divide that number by the total current liabilities. And then lastly, we are going to look at what we call the liquidity. Liquidity is basically how can this company be able to finance its operations using the cash that it's having. So liquidity is very important. And I want to say that of all these ratios, one ratio that is very important that is going to affect the operations of this airline is liquidity ratio, or we call it the cash ratio. So this is the ratio of cash vis-a-vis the total liabilities of the costs that are there. In 2015, it was 0.22. In 2016, it was 0.38. In 2017, it was 0.41. In 2018, it was 0.5. And then in 2019 is 0.46. The quick ratio in 2015 0.48. In 2016 it was 0.38. In 2017 it was 0.35. In 2018 it was 0.2, and then in 2019 it was 0.35. And then the cash ratio in 2015 it was 0.04. In 2016 0.07. In 2017 it was 0.13. In 2018 0.05, and then 2019 0.05. Now there's something that is serious here. When we look at the current ratio, an average of about 0.3 is too low for this carrier. The carrier needs to adjust in terms of the investments and pay its debts and release some of the debts that it's having. If possible, let them restructure again their debt so that they can be able to give more ownership to the debtors, so that they can be able to reduce these ratios, because it is very dangerous. But I'm going to focus more on the cash ratio. The cash ratio in 2015, it was 0.04. And therefore, it makes it very difficult to start making profit. So I would be able to say that if the airline has to have a going concern, then it must be able to work on a turnaround about its cash ratio. It has to start being liquid. A cash ratio that is less than 0.1, that is too dangerous. That means even if this airline was to be liquidated today, the investors are going to lose more than 70 or 80% of their ownership. They're going to lose a lot. They're going to use all the assets to pay back the debts, but this is still not going to be enough. Some debtors are still going to go without being paid. The progress in the cash ratio needs to be looked at. There are major challenges that we can be able to check, and one of the major challenges that is having is the high cost of operations. But then I can be able to say that let the airline work on its operations costs. Number two, let it work on its management. You see, when the airline has got a lot of strikes going on, the pilots here, the pilots there, the unions, there is a very serious concern about that, because all this causes this company a higher losses. So let the company work on its management. The last one is about the pandemic. I know the pandemic has affected the airline, but just like any other airline in the world, let them readjust. Let it work onto some of its debt restructuring. Let it work onto its operation. Let it work with incentives that can be able to expand onto its market. The nationalization of this airline is having both an advantage and a disadvantage. An advantage in the sense that the government will have it easier to pump a lot of money, so that when somebody is investing in these shares, it is risk-free. Because when the government owns it, then be sure that it's there to stay, because it will always be funded. But again, it poses the risk of that the accountability becomes very difficult, owing to the nature of probably the political system. That means we might leave out good brains outside. What I can be able to say that the share is not doing very well as per now, but as an investor, what can I be able to tell you? This share, for now, I cannot say it is undervalued, but this share, for now, is a share that you can invest in. It is slightly undervalued owing to some of the problems that the airline has faced before. But if they can be able to do a turnaround and the nationalization process to take place, then I can recommend that you can invest in this share as it is now. Thereafter, you can be able to make a good kill out of it when things began running. Thank you so much for listening to me, and thank you for this program. Welcome you to the next program next week. Thank you so much. My name is Dunga, and I'm your finance analyst.